Hi, this is Mark Carrington from mybitcoinprofits.com. I'm going to do my weekly review of the Bitcoin price and Bitcoin markets. Today is February 17th, well, in Australia it is, and we've had an interesting week in the markets. Let's just go back to where we were. We were looking to see whether we could be trading on the daily. This is a Bitcoin on the daily as the price broke out of the triangle. So we were at this point here with the triangle, and remember that my strategy, my preferred entry point, was to wait for the break, wait for the retest, and then trade on the retest. And the other place that we were looking at was whether we could be trading, waiting for a pullback. Remember, this is a weekly chart. We're waiting for the price to pull back into this trading zone and then to move upwards from there with the right form of price action. So let's have a look and see what actually happened and explore what we could have done and what the implications for what has actually happened. So we see quite clearly what has actually happened here is that, and I'm going to blow this up a bit so we can get closer into the action, is that this is when we were talking last week. That's the 9th of February, that's a week ago. We've got the price has moved higher, so we had a lower low here. The price has moved higher. It's given us higher low and a higher high, and it is closed above this short-term trend line that we've drawn. And this trend line is reasonably robust, given that it has a touch at the top here and several touches here. So it's a reasonably robust trend line. And the following day, the price has actually closed a little bit lower than the open, and then trade has run away ahead of us. So we have not had the break and retest that I was hoping for, and it's not a retest of any form, because you either retest down to this short-term trend line or retest to one of the horizontal lines. So if I put a new horizontal line in here, which is coming off the daily for this reversal here, it's a daily one, so I'll make it red, and we've not really retested that one. We've basically just run right the way through. So where we sit now is, are we in a position to trade? And there are parts of this chart that make me feel somewhat uncomfortable. But let's just go back. Remember, a few weeks ago we talked about reasons not to take a trade, and let's see which of those reasons. And that was when we were here and here. The reasons: the last high was a lower high, so this high, sorry, what am I right here? Last high was a lower high. Yes, so this high is lower than that high. So now we have the new high. Yes, yeah, that yesterday's bar 2 days ago is a new high, is higher than this. So that last high is now a higher high. So we've got confirmation that we have broken this short-term downtrend. The MACD is bearish, so that's the momentum indicator. Let's just have a look at that and see what it tells us. I think I've managed to put 2 on the chart, so we'll get rid of those. And what we see here is the signal line, which is the blue line here, has now just crossed the 0. The orange line is still below 0, but that is an indication that we are heading into a bullish trend. So that confirms that there's a strong possibility that we are now going bullish. The divergence didn't play out. This trade actually has broken that, so the divergence has disappeared. The risk of the double top, well, we still have that risk because we have these 2 highs here and we've not cleared those yet. So until this trade clears those highs, the risk of double top still there, and the potential head and shoulders forming. The head and shoulders would have needed to go down here. We do not have a potential for head and shoulders. So we are certainly got more reasons to want to take the trade. The challenge that I have as a trader is following a trade here is momentum trading. It's risky, and the reason it's risky is we have to decide where the stop loss is going to be. And I'm going to draw in an arrow from where the stop loss. Now typically the stop loss needs to be at the last ring low for a trade going long. So that is under this bar here. And if we entered the trade now, so above yesterday's bar, that is how big the stop loss would need to be. And we'd need to make a profit at that level up here. Let's get rid of that. And the question is will the price get all the way up there to give us a return that justifies that level of stop loss? So that's why we do not chase trades on an entry once it has started running, because the stop loss becomes too large and the reward that we will get is too small. So let's remove those. The other way to think about these is to explore whether in fact we could have just traded the break and what the risks are of trading a break. So what that means is we get a close above our short-term trend line, and then we will trade that break on a confirmation of an entry. So we will basically go for an entry above that line there. So I'll just draw a line in here and say that's where we could enter the trade. So we absolutely could have entered the trade above there. Stop loss would have needed to be below this ring low here, and would we have made enough money from that? So let's, if I can get all these button pressings to work properly. So the entry is there, that's the size of the trade, and we'll copy that one in and we'll stick it up there. So the answer is we could absolutely have traded the break. The challenge of trading the breaks is that you do have to be wary of what we call false breaks, and on this chart we already see a false break. You will see here we've got our short term, it's our medium term, it's probably even a longer term downtrend line, because this one was drawn off the weekly chart, and we've seen the price break up here. We've seen it close above our trend line, so we could have entered the trade here. Stop loss would have needed to be below this ring low here, which is at this level here, and we would have lost the trade. This is called a false break. So that's why as a trader I'm interested in identifying a break, a retest, and then enter the trade. The other part of why I'm not interested in taking a trade at this level, having missed that break and not trading breaks as part of my strategy, is that we have some resistance lines in the way of where this trade can go. So even if I get a reversal here and a ring low, so the price comes down and tests, let's say tests this horizontal level here and gives me a nice reversal here, have I got enough space to clear these resistance lines? So this line here, this green line here, comes off the weekly chart. It's a reversal off the weekly chart. The price tends to bang up against there and pull away from it. And this downtrend line is a medium-term downtrend line, and we're going to bang up against there. So the risk, the challenge of the trade is finding a large enough trade size, reward size, to justify the risks that we're taking. So my preference now that we've got a clear breakout is to wait for the price to do one of two things. I want it to go through this trend line, pull back to here, and then I'll be interested in trading here. or I wanted to pull all the way back down to here somewhere, although the problem with that is it'll make a lower high. And so it needs to pull all the way back down here, and then we can look at doing the retest. So basically saying I wanted to come back to this downtrend line and bounce off this short-term downtrend line. So that's pretty much it for a review of Bitcoin against the US dollar. I am going to have a quick look and see what actually happened on the Chinese renminbi against Bitcoin. The Chinese yuan. This is actually the onshore Chinese currency, not the offshore currency. So as you can see from it, it says CNY. And what we have here, we have something that looks a lot more like a retest. We got the break. We came down pretty well to the trend line. We've got a clear reversal here. This bar here is a lower low, and we've got a clear reversal here, and there was the opportunity to trade above this level here. The problem with the trade is it was probably a losing trade, because the stop loss would have needed to be below this bar here, and we would have got stopped out by this spike when the market opened. No, that was not when the 13th is last Friday, last Saturday. Interesting thing here is the Bitcoin market operates every day of the week. You'll see this bar here is the 13th of February, 14th of February, 15th of February, 16th of February. The Bitcoin currency market operates every single day, whereas other currency markets are typically 5 days a week with low volumes for Middle East trade on Sundays. So that is my review for the week. So what am I doing is let's go back to our chart, is that we're waiting for this pullback to here, or waiting for the bounce through this lower, this medium-term downtrend line, and to trade from there. So that's purely from a technical viewpoint. Thank you, and happy Bitcoining.